Investor here, and today I want to talk about the housing market. Has it stabilized? All right, before I dive in, I'll make sure you click on the subscribe button, hit the bell notifications to get notified whenever we put out new videos. All right, so first I'm going to start out with the median housing price. So in May of 2022, it was $430,000. In June of 2022, it dropped down to $428,000, large part because of interest rates. We had a 2.6% interest rate increase year over year. So that obviously factors into price, and pretty impressive that it didn't drop further than that. I do anticipate going into August, we're recording this here in August, in August and September, the price to continue to decline, but I'm looking at it as becoming fairly stabilized now, because what we've had is rates have stabilized from March till now, dropped a little bit, gone up a little bit, dropped a little bit, but seem to have stabilized in the fives right now. And you can get a 15-year rate at 4.75. So with that, that should stabilize things and help. And inventory is also starting to stabilize. The curve is going up, but it is flattening at this point. So we're seeing inventory starting to flatten. It does normally increase this time of year going into August. And then people either pull listings, or as things sell September, October, then people get into the holiday season for the end of the year. And then things don't really ramp up again until March of the following year. So we're hitting a typical cycle here. I don't see any housing crash imminent right now. And the reason I don't is just because the things have stabilized as far as pricing, inventory, and interest rates. Obviously, a black swan event could come in and change everything, right? Say war ramps up, things change, bad economic data comes out, but everything's been pretty good. The economic data has come out well. The unemployment rate is 3.6%, historically low. And also, I know we are a negative GDP, but it's not big negative GDP. Employment's still solid. So those are big factors, right? And income is okay. Income isn't going up with the rate of inflation, but inflation came down ever so slightly from 9.1 to around 8.5% here in July. So that helps. And hopefully things will drop even further here in August. Hopefully, knock wood. But anyway, everything looks like it is stabilizing. The housing market is coming to a more of a flat line. I think we're going to see a more stable market. Where things go from here, I think in 2023, we're going to see modest growth, anywhere from flat to negative in certain markets. Some markets could be down as much as 5-10%, even more certain markets. But on average, I think you're going to have anywhere from a 3 to 5% increase next year if rates remain flat, or if they drop a little bit, it'll help even further. As long as we have this lower inventory, which we are less than half of a normal healthy inventory of 6 months. So we're around 535,000 right now. Altos, who I use for research, gives great data. They were talking around 535,000 by year end. I think we're actually a little over 540 right now. But things are going to start to slow down a little bit. People pull listings off, which will drop that number. But they're going to reduce from 535 to 520,000 year-end inventory. So they're actually revising downward. They see a soft landing in the housing market right now. Again, there are factors that can change that. We can't control those factors. So we don't look at that. We're only going to look at the data that we do have and go off of that. So what am I doing? I'm buying. I'm continuing to buy. I'm going to continue to hold rentals as long as rates are historically low, being below 8%, and I can cash flow these properties. I'm going to continue to do that. I'm going to continue to do fix and flips. I am going to pull back though. So instead of being, 50-50 fix and flip to wholesale, I'm going to try to get to that 80% wholesale, 10% buy and hold, 10% fix and flip. So that's kind of the model I'm doing. You're going to have to see what works for you. And in your market might be very hot, or it might have gone cold. So you're going to have to adjust differently depending on what you got there. Anyway, guys, that's the way I see the market going. 2023 looks okay. It looks like a good, stable housing market. And from investors out there, it's going to be a good opportunities for us to be buying properties out there at even more of a discount. So, all right, guys, hopefully you got a lot out of this. We'll catch you in the next video.